Uh, so, friends, it is a great pleasure and honor to welcome Mr. Nilesh Shah, Managing Director of Kotak Mahindra Asset Management Company Limited. Uh, of course, he's a man who needs no introduction, but I'll still go through the formalities. Mr. Shah has over 25 years of experience in capital markets and market related investments and has previously held leadership roles with Access Capital, ICICI Prudential Asset Management, Franklin Templeton, and ICICI Securities. Mr. Shah is a gold medalist chartered accountant and a merit ranking cost accountant, and also has to his credit a co authored book on financial planning called A Direct Take. The budget 2021 is one of the most critical budgets for India in recent times. The COVID 19 pandemic and its related global socio-economic impact has derailed the Indian growth story that witnessed an economic contraction like most other global economies. The budget 2021 is therefore the roadmap for the V-shaped recovery of the economy. One of the key features of budget has been the focus on asset monetization from roads, warehouses, transmission lines, and other forms of assets. The government is clearly trying to generate capital to reinvest in the economy in an attempt to trigger a virtuous cycle. Such a policy, at a time when the stock market indices are at an all time high, is perhaps the best possible policy roadmap for the recovery. Such a policy also opens up avenues for retail investors or first time investors in the equity markets who can now reap the benefits of the newly announced divestment schemes. In a sense, this budget also allows for individual investors to reap benefits from the stock or bond markets, even via mere SIP based mutual fund investments. This in turn means that the role of asset managers in India becomes critical, and this is perhaps the best period for such professionals to make their mark. Of course, uh, we will hear Mr. Shah talk more about it. So instead of wasting more time, I would rather invite Mr. Shah to take us deeper into the various facets of these various aspects. So over to you, Mr. Shah, and thank you very much once again for joining us this afternoon. And we look forward to a illuminating session with you. Over to
Thank
you,
you,
Mr.
Rishabh. Thank you, Rishabh. Thank you, Mr. Subodh Kumar Agarwal, for inviting me over here. We are at a very, very interesting phase in post-COVID era. If you look at history of India since independence, virtually every other country has outperformed us. Japan was destroyed with atomic bomb. Today they are 15 times bigger than us in per capita GDP. South Korea was partitioned between North and South, and they had a devastating Korean War. Today, they are again far bigger than us. For 7 decades, we have seen Indonesia, Philippines, Thailand, Malaysia, Singapore, Taiwan, and Vietnam, and Bangladesh, and Sri Lanka, and China running fast ahead of us. We have done many things, but compared to others, we have done far less. Our living standard has improved over 1947, but others have improved far more. And which is where we are at that stage, that phase, where we can now accelerate our economic growth and reduce the gap vis-a-vis some of the other players. This budget is probably a catalyst for transforming India. For years, we have listened to what foreign advisors were talking to us. Even our 90s reforms were more driven by crisis because we didn't have more than 14 days FX reserves. And we implemented, what IMF and World Bank and others were telling us. This is the budget where we are now taking a call on doing what is right for us. For example, the rating agencies have always told us that you should be fiscally prudent. Now, this time we are saying that, look, you applaud UK, European Union, USA for spending money and supporting their people. There you don't say that they should be fiscally prudent. When China prints money, which has never ever been printed in the history of mankind, you applaud that. Now, for India, you can't have a different standard. We respect fiscal prudence, but today there is a need to support Indians and we will spend money. The food subsidy bill in this year, lockdown year, COVID-19 year, is 400,000 crore plus. It's 75% more than what was budgeted. Sorry, it's 3 times more than what was budgeted. Now, earlier we would have not spent this kind of money for fear of sovereign rating downgrade. Now we are willing to spend money. This is the mentality change which has happened. For 70 years, we have followed what we can call Russian model. Even though Russia got dismantled, but we didn't let go the Russian model. We thought public sector undertakings will serve the purpose of the economy. Though people who made this guideline or people who made these rules did experience MTNL versus Airtel and Vodafone and Reliance Jio. They did experience Air India versus Indigo and Jet Airways. They did experience SAIL versus Tata Steel. They did experience, let's say, shut companies like Hindustan Antibiotics Limited versus a Torrent or a Cadila or a Divi's Laboratory. Despite time and again private sector showing that they are better utilizer of capital, they are better creator of opportunities and growth, the allocation went on towards public sector undertaking. They had incredible talent, but they had fairly poor rate of return. A case in point is Hindustan Zinc Limited. In 2003, before divestment, it was making roughly about 100,000 tons of zinc. Today, it makes 16 times more at 1.6 million tons. It was sucking in 250 crore a year in those days, which today's terms is probably 1,000 crore plus. Now, Hindustan Zinc contributes 10,000 crore to the government kitty by way of dividend, tax, and royalty. One company moving from public sector to private sector, delta change happened from 1,000 crore loss in today's term or 250 crore loss in that day's term to 10,000 crore gain. Now, this is the budget where government has announced break from the past, that we will divest and privatize except in 4 industries, 4 sectors. The list of companies for divestment, privatization is impressive. Container Corporation, Shipping Corporation, Neelachal Ispat, Pawan Hans, BPCL, IDBI Bank, 2 PSU banks which are not named, 1 general insurance companies which is not named, and partial divestment in Life Insurance Corporation of India. This is the break where we want to create more Hindustan Zincs, more Maruti Suzukis in the future than Air Indias and BSNLs and MTNLs in today's world. If we can execute this, this will be a game changer for India. There are many such things which has happened in the budget, which is going to change our economy's growth orbit. Let me talk about 2 important things which can move India's growth rate into higher single digit or even lower double digit. The one big sector is production linked incentive scheme, PLI scheme. Many years ago, Government of India launched Textile Upgradation Fund. The intention was to make India a powerful entity in textiles. We were growing world's largest cotton, one of the finest cotton. We were having the world's largest spinning capacity. We were converting those yarn into finest fabric, which were used by all the brands. But when it came to the value addition in terms of garment exports, we were way behind countries like Sri Lanka, Bangladesh, Vietnam, and of course, China. So in order to develop India in textile space, government came out with Textile Upgradation Fund. It started giving concessional financing for setting up textile factories. There were some good guys who took some money to set up textile factories. Most of them were crooks They took money, gold-plated their factories, siphoned off the money, converted NPS. Net India didn't become anything big in textiles. Now government has come out with production-linked incentive scheme for sectors including textiles. Here there is no incentive for setting up plant. Here incentive is only if you sell, if you produce. In textile upgradation fund, it was democracy. Everyone got something. Here there is meritocracy. If you produce, you will get. If you produce more, you will get more. If you produce fast, you will get more. You will get early. This production-linked incentive scheme has potential to bring companies across sectors from bulk trucks, mobile phones, electronics, textiles, auto components, from China to India, from rest of the world to India. We have now started seeing companies seriously considering India for setting up their factories. Many of Indian companies are getting into contract manufacturing and making television, fridge, air conditioner kind of consumer durables for global brands. Many of companies have started supplying consumer durables to global brands. And pretty soon we will see companies across textiles, electronics, mobile phones, bulk trucks, etc., supplying and becoming part of global supply chain. We believe PLI scheme is capable of adding more than a percentage point to India's GDP on an incremental basis, somewhere around 2025, 2026. The journey will be 0.25% this year, 0.5% next year, 0.75% thereafter, 1% thereafter, and so on and so forth. This is one big game changer for Indian economy. The second game changer is real estate and construction and housing. If we see housing, real estate, construction, it has dipped from double digit to single digit in terms of contribution to GDP. They were contributing about 15% to GDP. Now they contribute 6% to GDP. Now stars are aligning for the development of real estate sector. One, house prices have become affordable. The affordability index has improved from 50 in 2012 to 27 in 2021. Work from home environment, everyone is short of one room in home. If someone has 1-bedroom hall kitchen, he needs 2. Someone has 10-bedroom hall kitchen, he needs 11. So there is demand, there is affordability. Housing interest loans are now available from Kotak Bank at 6.75. Other banks will be all around it. And most importantly, the RERA has ensured that developer no longer can keep on taking consumer for a ride. Consumer is protected. We believe real estate, housing, and construction sector will start contributing a percentage point to GDP over 2025, 2026, just like PLI. Both will contribute 0.5% of incremental GDP in FY22. Then there will be 1%, 1.5%, 2% eventually. This construction and PLI put together can lift India's GDP growth from current 6-7% average to probably around 8, 9, 10% if we are lucky. This growth, this opportunity is exciting investors. And that is reflected into stock market. For any market to run, you require 3 things: money, sentiments, and fundamentals. In terms of money flow, FPIs have invested close to $23 billion in last 12 months. And it looks like the trend is continuing in the month of Feb, also post-budget. Retail investors are one step ahead of FPIs. They have pumped in close to $25 billion in last 12 months. They also have enjoyed the success. They invested somewhere around March, April, May, June, July, which has made tons of money for them. Put together, retail and foreign portfolio investors, $50 billion has pulled market up. Going forward, retail, FPI, insurance, all are likely to be buyer of equity in calendar year 2021. Market will remain supported from flow point of view. Sentiment-wise, things have kept on improving month on month. If you look at Jan 21 headlines, GST collection 1,20,000 crore all-time high. Railway freight loading up 10% year on year, near all-time high. Power consumption at 189 gigawatt now, all-time high. FX reserves, including forwards at between $600 to $625 billion, all-time high. Unemployment rate hovering around pre-COVID level. Put all these things together, sentiments have been boosted as activity levels have kept on improving. In terms of active cases, despite few scare in recent time, number of cases have kept on falling. The vaccination is spreading at a rapid pace. Put together, sentiments are positive today than they were before. The most important thing is fundamental. We have all seen how Harshad Mehta, Ketan Parekh pulled market and money power. But they were not backed by fundamentals and hence prices corrected. Now with fundamentals supporting, markets can move forward. Look at the fundamentals. If you look at Nifty 50 companies' profit, it was about 98,000 crore in December 2020 quarter, December 2019 quarter. March 20, due to last 7 days lockdown, the profit came at 80,000 crore. June, there was a long lockdown, profit came at 58,000 crore. So 99, 80, 58, the profit was continuously dropping. Markets were looking expensive. September quarter, there was not much hope. Profit came at 1,04,000 crore.
Yes, you are not audible.
I think his video has frozen.
He is not audible as well.
नहीं उनका वीडियो फ्रीज हो गया है शायद कुछ कनेक्शन में होगा जस्ट लेट्स वेट फॉर हिम टू रीजॉइन
He is not in the meeting. Join back.
Hi, sorry, there was some Wi-Fi disturbance.
No worries, sir. Please.
The December quarter at 1,21,000 crore is one of the highest in the history and 22% higher than 98,000 crore recorded last December. Now for March 21 quarter, expectation is 1,30,000 crore profit. This is the kind of profit growth which corporate India is reporting. If I do backward calculation, the P ratio looks like 46 times. If I look forward calculation, P ratio is 24 times. This is the kind of profit growth which companies are showing. If results are going to be this good, undoubtedly markets are not going to give deep correction. When we were beginning December quarter estimates, the Nifty earning was supposed to be about 128 rupees. As the results kept on coming and upgradation happened, the number came to roughly about 131. Today, when all the results have come, number is 165 rupees. Now, you annualize this into 4 quarters, you get a profit EPS estimate, which is 165 into 4, roughly 660 rupees. At 15,000 Nifty divided by 660, it's coming at a P ratio of 20.
I think his video has again got frozen.
You hear me?
Yeah, Nilesh, we can hear you.
Market today have support of fundamentals, sentiments, and money power. And hence, the correction is likely to be very small rather than deep. Now, are there any risks in the market? Well, equity markets are always risky. The biggest risk which we are facing is second wave of infection. We have seen in places like Amravati in Maharashtra, number of cases jumped 7 times from 100 to 700. Now, if we remain careless and we see mutation like UK, South Africa, or Brazil, undoubtedly there will be need for a stringent lockdown, and that could have material impact on economic recovery, and that could create a market correction. Oil prices are trading at $62. If it goes further higher, undoubtedly it will create a small correction in market. But overall, if we see, subject to this infection second wave coming, we think markets will continue to do well. We are somewhere in 2002, 2003 to 2007, 2008 period where economy kept on growing, earnings kept on rising, and market kept on moving higher from somewhere around 3,000 Sensex to 21,000 Sensex. Now, 21,000 was probably a bubble. It needed to correct, and it did correct in 2008. But it never went down to 3,000 again. It kept on rising steadily again and again. This is the time to be long equity. The economy is doing well. Companies are doing even better. And combination of money power, flow, and sentiment put together, markets will surprise investors. More importantly, there are many investors who are sitting on cash waiting for a correction. My feeling is that unless until they are lucky and countries see second wave of infection, they'll have to catch the running train. Market is never kind to come down so that all the waiting cash can be invested and then it starts moving up. Generally, market behavior is known to suck all the waiting cash and then give the correction. So I do see from a flow point of view, sentiment point of view, and fundamental point of view, market remaining supported, and a long investor is likely to benefit from the same. With this, Rishabh Bhai, I will end my talk. Happy to answer any questions people have.
Yeah, thank you, Nilesh bhai. Grateful for that very not only insightful but also the vote of confidence. I'm sure everyone is pretty shaky when the markets come, given the status it is in. And your reassurance, I'm sure, has made a lot of people feel very relieved, especially because you mentioned the reasons why you feel that no big correction is in the offing. I have got some questions from the audience. We also have an audience from social media on YouTube as well as Facebook who joined us. But the first question I want to ask you is from a very young member that we have who's right now on the highway, and he has WhatsApp me saying, "Can you ask this on my behalf?" What he's written is fractional investment is gaining a lot of traction in India today. Strata sale helps people invest in grade A real estate with very less investment and with regular income through lease rentals. Can you throw some light on this form of investment and whether it is advisable? Apparently,
So,
CSL and Anarok are backing such investment models.
so one, this model has taken off in US, where for an item like Bitcoin or real estate or even high price shares like Berkshire Hathaway, intermediaries provide a partial or fractional ownership to investors. Now, this is exactly what mutual funds have been doing in Western world as well as local market. You can come with 500 rupee in mutual fund and you get fractional ownership of whatever stocks I have invested, be it Infosys, be it TCS, be it ICICI Bank, or whatever it is. Now, the same thing has been packaged as fractional ownership. In mutual funds, we give fractional ownership or diversified portfolio. Here, you are able to get fractional ownership of the stock or real estate or anything else which you want. So, fractional ownership is more about giving empowerment to an individual investor, to a small investor, in choosing instead of diversified portfolio, a single unit of a portfolio. Now, this is double-edged sword. If you are right and you pick up right quality stock, you will do extremely well. But in case you end up picking a wrong stock, you end up paying a huge price. Focused concentration has its upside as well as downside. Diversification has limited upside, but also limited downside. At the end of the day, we should let investors take a call. Do they want diversification? Do they want concentration? Do they want direct investment? Do they want indirect investment? And let everyone choose a path which is suitable to them.
Thank you. A question from Deepak Chaudhary in the chat. Which will be the sector in boom? What is your crystal telling
So
you?
there could be sector from a business point of view, and there could be a sector from a stock market point of view. So if we see from a business point of view, we believe two sectors, chemicals and contract manufacturing, will do extremely well. Chemical is where tech industry was in 2000. In 2000, if you remember, Indian IT companies got an opportunity to convert two zeros into four-digit number 2000. It was a tedious task, but if not done, it could have created material impact on the way world was functioning. Army of Indian software programmers achieved that, and then instead of returning back, they kept on doing some other thing, some other service to the customers, and slowly people started liking Indian IT industry. The same trend is now happening in chemical industry, where China is vacating that space because of cost and pollution constraint. Indians always had the knowledge of chemicals. They are making niche specialty chemicals in a smaller batch size at a competitive rate. Buyers are emerging and giving multi-million dollar contracts to Indian companies. Consolidated, there is one buyer who is buying almost $1 billion worth of chemicals in India from different companies. We think chemical sector is here to grow. Contract manufacturing is another sector where companies will enter into an agreement to supply goods for global buyers. It could be electronics, consumer staples, it could be mobile phones, electricals, textiles, auto components. This PLI scheme supported contract manufacturing will also see business growth. And companies which are engaged in this are today reporting 100% volume growth year on year. So chemicals and contract manufacturing sector will do well from a business point of view. However, at today's valuation, a lot of this is factored into the prices. So I wouldn't say chemical sector is cheap from a return point of view, but I will say chemical business is expected to do well over the years to come.
And suppose we were talking about the stock market, the same question.
So from a stock market point of view, there is home improvement sector which should do well. Rishabh bhai, all of us have worked from home for bulk of the last year, and now our houses are kind of wearing down. कहीं पे पेंट निकल गया, कहीं पे टाइल्स निकल गई, कहीं पे यू नो चेयर का टेपेस्ट्री घिस गया है, कहीं पे फैन नहीं चल रहा. Now in America you will go out in the market, buy these things and start doing it at home. But in India, we have the luxury of calling a carpenter, electrician, painter, plumber to do all this work. Because of lockdown, because of COVID fear, we haven't opened our house to outsider yet. But after vaccination, we will open our house. Plumbers, carpenters, painters, furniture makers, they'll all visit our house and improve our house. On top of it, there is primary demand. Housing is sold like crazy. In Mumbai, average selling of houses is about 6,000 houses a month. In December, it was 20,000. January, it was about 15,000. So primary and secondary both combined, there will be more demand for home improvement products. From plywoods to tiles to paints to wires and cables to electricals, lighting to consumer durables like fans, TV, fridge, cement, and housing finance companies all will benefit from this home improvement cycle. Markets today are still not pricing in the kind of volume expansion in this sector which we are likely to see. And hence, I think from a stock market point of view, home improvement sector collectively should be a good sector to bet upon.
Thank you, sir. I don't know. I think the markets have closed. Otherwise, people will start buying. I don't know which scripts like crazy after hearing you say that. Another question I have is many experts are of the view that budget could have done more to bolster the economy through income support rather than enhance outlays on infrastructure and capital investment. What is your take on it?
So, Tundar Matir Bhinna, different heads, different thoughts. Now, all these critics, they should have also given a suggestion to raise resources to fund that spending. See, the reaction of opposition party and ruling party to budget is the same. Every year, year after year. And when the role reverses, the comments remain the same. Opposition party can't see anything good in the budget. Ruling party can't see anything bad in the budget. At the end of the day, we have to work within our limited resources. When you provide food to needy people, that's income support. When you give Manrega work to poor people, that's income support. And more importantly, people fail to recognize that earlier in our income support scheme, there was huge leakage because of corruption. With Jandhan, with Aadhaar, that corruption has been reduced to a great extent. It has not been eliminated, but it has reduced significantly. Ghost recipients from Manrega, rationing has been removed. All those things has increased the efficiency of the spending. And that is not taken into account while criticizing the budget. Could budget have done something better? Answer is undoubtedly yes. Budget is not 100% right, but at least it is moving in the right direction. And this budget is not cast in stone. There will be many supplementary grants coming. This year's budget provided only 100,000 crore in food subsidy, and we ended up spending 400,000 crore. So where there is a need, there will be course correction. So I will say net budget is fine. It has attempted many ambitious things. Market is today rewarded the bold intent of the budget. But eventually what we need is execution. Last budget also you announced LIC listing. Hasn't happened yet. BPCL privatization is going in for 2 years. Nothing has happened yet. Air India divestment we are talking about last decade. Nothing has happened yet. So announcements can excite people only to some extent. Finally, they will need execution. And execution is the key.
Very true, sir. And sir, another question which has come from the chat is something which bothers a lot of people, that there is an apparent disconnect between the stock market and the real economy. There is still a large business. I mean, there is so much when we talk about all the sectors that you spoke about, and but especially at the medium, smaller levels, there are large businesses which are suffering from losses due to COVID, and they've still not been able to come out of it. So that people perceive that there is a huge disconnect between the market as well as what they perceive as the real economy. How do you explain this phenomenon, and what do you see things coming forward to?
So if you look at 1990s reform by Dr. Manmohan Singh and Narasimha Rao, they reduced import tariffs, they opened up license permit tranche, they freed up entrepreneurs. There were sets of industrialists who were complaining, ये सरदार पागल हो गया, हम लोग की बैंड बजा रहा है. There were sets of industrialists who were very happy. They said, अभी तो हाईवे मिल गए, हम देखो क्या दौड़ते हैं. Both were right. People who were complaining, their businesses got shut down. Inefficient chemical company, inefficient textile company, jute company. In fact, entire automobile industry got wiped off. One Hindustan Motors, Premier Automobile, Standard, a two-wheeler company like LML Vespa was wiped out. There was destruction. But then on that destructions, we created giant companies like TCS, Infosys, Wipro, HCL Tech, Sun Pharma, Torrent, Cadila, Divis, Bharti. So there is creation and destruction happening simultaneously. Now, when I'm talking about numbers, 1,04,000 crore to 1,21,000 crore to 1,30,000 crore. This is not notional number. These are hardcore cash numbers which are coming. These companies are making this kind of profit. Why are they making profit and why are you getting impacted by COVID-19? Please go into self-analysis. Are you adding value to your customer? Are you competitive? Are you working hard? See, in our culture, Rishabh bhai, Brahma, Vishnu, Mahesh रहते हैं. ब्रह्मा का जॉब है क्रिएट करना, विष्णु मेंटेन करता है और शिवा डिस्ट्रॉय करता है. There's no other culture in the world where destruction has been given this kind of importance. So there will be destruction in economy of inefficient players, uncompetitive players, players who are only arbitraging tax and government advantages. This is new India where only those companies will survive, which will be competitive, which will be able to take the world on.
But given our population, I mean, this is not a question. This is just a follow-up from what you are saying. Given the size of our population and the diversity and the kind of challenges that we face as a nation, uh, do you think we have the luxury of this kind of a destruction where people are left on their own? I mean, there will have to be a large social support if we are going to allow this kind of churning happening in the economy. What is your take on that?
So there cannot be a debate about supporting the bottom of the pyramid. But should we protest against policies which are keeping them at the bottom of the pyramid for last 70 years? Why did we lose to Japan? We were not given atomic bombs as a gift in Second World War. Why did we lose to Korea? Korea has 70% hilly region. We have the world's largest arable land. Where is the competition between us and Korea? How come Indonesia, Philippines, Thailand, Malaysia, Singapore went ahead of us? What did they do which we could not do? Forget that, Bangladesh is ahead of us. So what have we done in last 70 years which we are proud of? Unless until we destroy what is inefficient, how will you improve? I'll give you some example in Mumbai. And this is not coming, Rishabh bhai, from some capitalist fund manager. This is coming from a person whose father was a mill mazdoor. He was working in a textile company called Mukesh Textile Mills. It's right at the Palwa Bandar, just little ahead in Kolaba, right on the seashore. This mill was uncompetitive. आप मतलब ट्रक में कॉटन लेके आएंगे, how will you reach Kolaba? It will take you one day to probably move from Thane or Borivali to reach Kolaba. The cost which this mill was incurring for buying electricity or water was very high. They didn't destroy the mill. So it was making losses. Then they shut down the mill. All the workers lost job. My father also lost his job. And under the stress, he died. Our family was virtually on the road. We didn't destroy Mukesh Mill. We allowed it to decay. Until today, Rishabh bhai, that Mukesh Textile Mill is standing in Kolaba doing nothing. This is where our capital is blocked. Now, let me give you another example where we have converted this. There was another textile mill in Lower Parel called Phoenix Mill. It was also shut down. But fortunately, that land was reused for creating an entertainment complex, a shopping mall, a theater. Today, there is vibrancy. On one side, residential building has been built. On the other side, commercial building has been built. In between, there is shopping mall. All the mill mazdoors, son, daughter, have started getting a job in those malls. There is overall economic improvement. Now you have to take a call. Do you want Mukesh Textile Mills, which will keep on decaying? Or do you want Phoenix Mills, which will reinvent itself by destroying mill and becoming a shopping mall? Now, there will be, critics who will say that no, Mukesh Mill should start functioning. Well, that's not going to happen. It's uncompetitive. It can never compete with the rest of the world. We have to follow Brahma, Vishnu, Mahesh. Brahma has to create. We have to encourage Brahma. Vishnu has to maintain. We have to encourage Vishnu. And Shiva has to destroy. When Shiva is destroying, it's not bad. It's a good thing. That's what our culture has taught. That's what economy is teaching.
Fantastic, sir. That was a really beautiful illustration that you gave, and very illuminating, I must say. Some more questions, sir. I hope we have some time for at least.
Sure.
So amongst the questions is, what according to you are the 3 hits and 3 misses in the current year's budget?
So one, this asset monetization is a big hit. Obviously, it needs to be executed. Giving up on this ideology which has restricted India for last 70 years, that public sector is all solution for India's problem, is another hit. More importantly, this budget is all about women empowerment. Rishabh bhai, you'll be surprised to know that today, before the budget in India, a woman could not have worked in night shift in a factory. We have seen women running automobile late in the night shift, that's permitted. We have seen women working in hotels, 5-star, 3-star, 4-star, that's permitted. We have seen women flying aeroplane, air hostess serving us, that's permitted. In BPO, KPO, IT company, women can work anytime. In banking and financial services, women can work anytime. But if a woman wanted to work in a factory, it was illegal. Now, this is the reason why our ready-made garment factory ran only one shift. The Bangladeshi, the Vietnam, the Sri Lankan started working in 3 shifts. मतलब आप अपनी फैक्ट्री 33% पे चलाओ और दूसरा 100% पे चला है, आप कैसे कॉम्पीट करोगे? And why are you restricting women to work late in the night in night shifts? Then that should be applicable in all the services industry also. Are women so inferior that they can't work in the night? we wanted to keep women inferior by putting such kind of restriction under the garb of protecting women. Now we have discarded that mentality. Women are equal to men. They can work in the night if they want to. This single thing can change India's ready-made garment industry's fortune. And also women who will work under that. This is true women empowerment. In TCS, 5 lakh employees, 1,75,000 employees are women. Nothing has been done better to empower women than allowing them to work in TCS. 1,75,000 women are now financially independent. They don't have to depend upon their father, husband, brother for survival. This is true women empowerment. What TCS has done, what IT industry has done was possible because Government of India didn't apply that stupid factory rule onto the service side. Now we are applying what is good in the services to the factory side. This is true women empowerment. This is the best part of the budget. The 3 misses in the budget, I mean, I feel bad that we are still not tackling our biggest problem. Rishabh bhai, in last 21 years alone, Indians have spent close to $373 billion for import of gold on an official basis. Gold smuggling आपको भी पता है, मुझे भी पता है, rampant है. आप कभी भी बाहर से आते हो, especially from Middle East, you will find people decked in jewelry and walking past Green Channel as if they're, that's their normal jewelry. मतलब ऐसा लगता है कहीं शादी के रिसेप्शन में आए, एयरपोर्ट पे नहीं है. Our total spending on gold is $500 billion in last 21 years. Unfortunately, this entire gold is lying in Tijori. Maybe a little bit is in white economy, but rest all is in Tijori. The budget hasn't done anything to defreeze that stock. It's our saving which is stuck. मतलब हम तो एक ऐसी country है which can be described as a patient who is giving blood donation even though he is admitted for treatment. You are hoping that your health will improve by doing blood donation. अरे भैया तेरे को ब्लड की जरूरत है, तू कटोरा लेके सबसे पैसा मांगता रहता है और फिर घर पे आके $500 billion बाहर भेजता है. This budget hasn't done anything to change that. I would have really appreciated a gold amnesty scheme which would have mobilized this Tijori ka gold into white economy. That would have given taxes to the government, that would have given money to the businessmen, and that would have defreezed India's savings for India's growth. So that's one big miss. The second big miss in the budget, again, is related to, removing the taboos. For example, Rishabh bhai, we all know in our surrounding that people gamble. श्रावण के महीने में जुआ खेलना यहाँ पे कल्चर है. आप और मैं चाहे कितनी भी बात कर ले, but we know there are people who are playing. Now, why are we not legalizing such activity? Gambling, IPL betting. These are the things which needs to be part of formal economy, because when it is not part of formal economy, they support criminals. आप उनको responsible industry बना दो कि भैया gambling करो, but ensure responsibly. Betting करो, but ensure responsibly. अगर ये कर देते हैं तो we are cutting funding from criminals. We are making them responsible industry. Why will people not do it? This is what we have to do in integrating black economy with white economy, making criminal activities responsible industries. If we do that, there will be people coming into India for gambling rather than Indians going to Macau and Las Vegas and Singapore and Nepal for gambling. We will see people betting in India and others also betting in India rather than we going out to bet. So we need to remove this taboo of letting go, opportunities where we can merge black economy and white economy. So that's also one thing which is being missed in the budget. The other thing which probably I didn't like, and it's probably my personal grudge, salaried class is the person who is paying the maximum tax. Now we are taxing even on provident fund. Is it fair? I think taxation burden should be distributed equally. And putting such higher level of taxes on salaried class is not going to work. The talent will move out of India. They'll probably move to Singapore and work from there. So these are the three things which we probably should have either avoided or adopted.
Thank you, sir. I think very insightful again. And I agree what you mentioned about this whole concept of sin tax that we have or things. I mean, the same applies to prohibition. I don't think
Yeah.
prohibition has prevented anyone from not drinking. It only moves the whole economy to contraband, and it's the negative elements who actually make money. The one who has to drink always has to drink. Another question is the Supreme Court has withheld verdict on moratorium issue and interest issue, declaration of new NPA, but the verdict may be announced any day and all NPA has to be disclosed. What will happen to our banks in this scenario?
It's a very interesting question. And the fear is that today there will be spike in NPAs once this moratorium is removed. However, banks have provided lots of provisions to cover for this moratorium. And as economy is improving, the fear about NPA is receding. But can I say hand on heart that this moratorium removal will have no impact on NPAs? Answer is no. There is a worry and we need to watch it carefully.
That's a very diplomatic answer, sir.
Rishabh, there is no clarity available.
That is
कि
true.
जहां पे समझ नहीं है वहां पे एक्सेप्ट करने में कोई गलती नहीं है कि मुझे नहीं मालूम.
सही बात है.
आज आरबीआई और बैंकर्स को नहीं मालूम तो मुझे कहां से मालूम पड़ेगा.
That is true. And sir, the last question in the chat is what is the risk reward probability for investors to invest in this market? Again, they have mentioned which are some of the sectors or which are the stocks if someone wants to invest selectively. I will rephrase that as to what is your top 5 Nilesh Shah pick?
So I can't talk about stock because we are restricted by SEBI regulation. But I will say that subject to this second wave of infection, I think markets are poised to do well. It doesn't mean that markets will continue to rise every day. Of course, it will go up and down. But if you are a long-term investor in this market, you should get many opportunities to make money. Equity will be preferred asset class and deliver return far better than fixed income, far better than gold, and also far better than real estate over next 4 or 5 years.
And let me do the promo talk for you. If people are confused about the stock, Kotak mutual funds are always the option for everyone.
Definitely, we'll be more than happy to serve our customers.
Thank you, Nilesh bhai. This is delightful, really delightful to be able to speak to you. It's been already 1 hour, and we just didn't even realize that we've been online for so long. So, over to you, Subodhji. If I had my way, I would have continued, but I know that we have to close at some other point of time. But I do hope that we will be able to meet in person next time whenever the opportunity arrives, and you please do visit us. When you are in Calcutta next, and we'll be very happy to host you, sir.
Sure.
So over to you, Shri.
Thank you, Rishabh, and thank you, Nilesh bhai. Nilesh bhai has been being a chartered accountant, has been very kind to the CA Institute, and I being in the CA Institute in the council and in the president, many occasions we had the opportunity to interact. Maybe in the our best presented accounts also. Sometimes some matter had to be discussed.
I think his video is now frozen.
Yes. Rishabh, I have a 5 o'clock meeting, so I will log out.
Very much.
Thank you.
Thanks a lot. Subodhji, we'll call it a day. Thank you. You were online all the time. Just now, I think video has gone kaput. So thank you everyone for joining us, and we look forward to you, all of you, in future such events. Thank you very much.
Sorry, my line got disconnected.
सुबोध जी, नीलेश जी को 5 बजे की एक मीटिंग थी,
Okay.
तो he just left actually.
So we with hearty vote of thanks to Nilesh ji in absentia, we conclude this meeting. Thanks to everybody. The meeting is concluded.